people are set in their ways, and they have a certain way of thinking. And evolution is always easier than revolution. But every now and again, a revolution happens. The internet was a revolution. That's the same case with Bitcoin as an investment asset, and it's the exact same case with Bitcoin as a tool for doing other things. Tesla produces bad numbers, the stock drops. You have to wait till the next earnings before the stock likely starts rolling back up again. Mm-hmm. And the best thing about Bitcoin, nobody runs Bitcoin.
Right.
And this is why governments should feel comfortable investing in Bitcoin, because nobody controls it. We're heating 11,000 homes in Finland using Bitcoin. It takes 2 megawatts of power, and we can heat 11,000 homes. And all the while, those companies are allowing consumers to pay 25% less for their electricity.
Saylor said something to the effect once that there's only a certain speed at which a profound idea can propagate across the minds of men. And maybe that's exactly what we're describing here, is this thing just takes time for people to wake up to it. Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLFNYC.com. So you said it was January, correct me where I'm wrong, January 21, you guys bought your first 150 million in Bitcoin for the Treasury.
For Treasury.
And then we are recording today, July 26, 24. You guys just announced you bought another
100 million.
Another 100 million to top off the Treasury.
Yeah.
And so
we've bought at times in between that. It's just, we're doing opportunistic trades where we're buying $5-10 million. But this time we went in and just plunked a big bunch of money down.
Got it. So that's kind of the headline generating event.
Yeah.
And then you said you're looking at weighted average cost of capital. So that's what's driving the buy or sell decision on the Bitcoin you're producing. I'm sorry, the hodl or
exactly. So as a company, you need cash to operate. And so a normal company that operates in the fiat world gets fiat money. Yeah. Right. And then they decide, okay, are they going to, when they need to invest in growth initiatives, are they going to sell equity? Are they going to use debt? Or are they going to use cash as it comes in? We don't operate in the fiat world in the sense that our revenues are Bitcoin denominated.
Right.
And so we prefer to hold as much Bitcoin as we can. Yeah. And so if we have to fund operations or fund growth, we look at, should we use debt? Should we sell equity? Should we sell Bitcoin? And there has never been, in recent time, a reason to sell Bitcoin, because it always pencils that Bitcoin will, if you use the low end of the range of 20% annualized, it's still better than the other alternatives.
Yeah. Is convertible debt ever in the arsenal for you guys?
We did a $750 million convert in the fall of 21.
Okay.
And that helped fund our growth pretty heavily through 2022. And then we paid off half of that last year. Okay. And because we were able to buy it back at a discount. So with convertible debt, it trades like equity does, right?
Right.
And so there's par value, meaning $1 of debt's equal to $1 of value. Well, it was trading at 70 cents on the dollar. And so we were able to buy back $411 million of that debt.
Got it.
For $300 million.
Got
it saved our shareholders $100 million.
Got it. And so it was trading down because the share price was
down, price of Bitcoin was down. Right. Everybody was kind of, think of it as, it's like sentiment on the likelihood you'll be able to pay it back.
Sure.
Right?
Right. And so you can then be opportunistic when people are bearish on the sentiment and buy it back.
Exactly.
Right.
Yeah.
And then on the flip side, the buyers would get upside participation if you were on the opposite situation and they converted.
Yeah. So as you start getting near the convert price, similar to Michael, when we did ours, it had about a 30% premium for the conversion. And so if you start getting close to that conversion point, then it sometimes will even trade above par.
Right.
But as you get closer to the maturity date, and in this case, the maturity date is December of 26, it'll start trading closer to par.
Got it.
Because the certainty that you're going to pay it back is pretty high at that point, unless there's a bad sentiment in the marketplace, and then it can even crash down.
Is this a common competitive strategy amongst miners? Sort of the way you. So what are you guys doing different and compared to what other miners are doing?
It has to do with the strength of your balance sheet. So we have always made a point to have a very strong balance sheet, have as much money on the balance sheet as possible. Because our definition of luck is opportunity meets preparedness. And in business, if you have the ability to buy something when the opportunity strikes, that's what makes a winning trade, if you would. Sure. It's like, anything, real estate, any other asset. If you have the cash when the market drops, you can go in and buy.
Yeah.
And it was the same thing if you look at our $100 million purchase. Bitcoin has had these really interesting oscillations lately.
Yeah.
And if you buy the dip, you can actually buy Bitcoin at a discount.
Yes.
And then one thing people don't realize that we do is, people ask us, well, why are you mining Caspa? What the hell is that? You're a Bitcoin miner. Well, 1 kilowatt of energy for me generates 8 cents of Bitcoin value.
Okay.
1 kilowatt of Caspa generates $1. I can use that $1 to buy Bitcoin.
Oh, wow. Okay. Caspa is
it's a proof of work coin.
Got it.
It's one of the up and coming coins.
Got it.
Very interesting technology, but we're constantly looking at ways, what can we do to generate revenues that we can turn into Bitcoin?
Got it.
Because anything we can do to buy Bitcoin at a discount is good for our shareholders.
Sure. And then are you just then mining the Caspa and then directly liquidating it to Bitcoin? Or
so we'll hold a portion of it.
Yeah.
And then, as we become a bigger and bigger part of the Caspa ecosystem, we can't hold too much because then, it's almost like we're the 51%. You don't want to be that person in the marketplace. And so we'll liquidate. But Caspa's had a great run. It's gone from under a penny to over 18 cents.
Got it.
And so, balance sheet management will keep a certain amount, but we'll risk adjust how much we want to keep, because if you have so much Caspa that it would take you a month to sell it all, you'd crash the market at the same time.
Thinly traded, right?
Yeah. So,
what is it? Do you get any backlash from an optics standpoint from the Bitcoin maximalist community about that? Because they tend to lash out at everything that's non-Bitcoin. And how do you manage that?
The haters definitely. The haters definitely amplified some of their vocalisms. And, some of the memes were the usual kind of stuff. But once you explain it to people, at the end of the day, there is you can be very binary in your belief about Bitcoin, or you can be reasonable. Yeah. Right. I have a definition of good and bad, which is different from most people.
Okay.
Right? Because good and bad often are moral values. But if you look at it from a purely rational perspective, if you're creating value for your stakeholders, shareholders, employees, partners, the ecosystem, the Bitcoin world, then that's good. If you're destroying value, then that's bad.
Right.
So if I'm doing things that help enhance the Bitcoin ecosystem, because it means I'm mining more Bitcoin, and I'm being able to raise money to mine more Bitcoin, and I can raise money to buy more Bitcoin, what's bad about that? I'm just creating value for the Bitcoin ecosystem. Right.
Makes sense. Yeah, no, I tend to agree, because it comes down to freedom ultimately. It's like, sure, you can go online and criticize these other projects, and that's good, right? That's good that you have the clash of ideas. But when you start to moralize people for their investment decisions, I'm less clear about how that makes sense, unless that investment is something that's directly violating the life, liberty, and property of others, right? Absolutely. If you're investing in a war machine or something like that. So, yeah, I've always thought that was a bit strange, but it's something that everyone deals with in this space no matter what. If you even say the word shitcoin, sometimes people will come after you. So I was curious about that. So you guys you now hold, you said north of 20,000 Bitcoin. Is that, where do you stand in terms of your publicly traded company?
Yes.
So in terms of publicly traded companies with Bitcoin treasuries, that puts you near the top of the heap, I would imagine?
We are either number 2 or 3. I think, obviously Microstrategy is the big daddy with over 200,000 Bitcoin.
Yeah.
But then when if you take Coinbase out of the equation, because Coinbase has they're an exchange, so it's not their Bitcoin.
Right.
But you look at, for example, Tesla, you look at Block, you look at other companies like that, they're in the 1,000-something Bitcoin. So, having 20,000 Bitcoin puts us in an interesting position.
Yeah.
It's what a lot of people, I think, forget about, and for lack of a better term, let's say non-Bitcoiners, they compare Bitcoin to things like gold, silver, and other commodities that aren't finite. Bitcoin's the only investment instrument that you can't print more of.
Right. Ever. Yeah.
And so why shouldn't you try and accumulate as much as possible while you can? Because no matter whose math you do it, if Bitcoin's going to go to zero, well, my business is a mining business is going to be out of business anyway. So why shouldn't I try and have as much Bitcoin on my balance sheet as possible? Because if the US government decides to hold and buy Bitcoin, if other sovereigns decide to do it, the price of Bitcoin's only going to go up.
Yeah.
Which means that my balance sheet's only going to get stronger and stronger and stronger.
Yeah. Yeah, it's a great point. This September 5th through 9th, 2024, join me on the Pacific coast of Mexico for our first ever men's retreat, which we are calling The Art of Alpha. In a cooperative training environment at a world-class retreat center, we will be having daily meditations, movement practices, yoga, cold plunging, infrared sauna, lymphatic drainage, massage, heart rate variability training, gut health lectures, all while enjoying an anti-inflammatory diet, free of allergens and designed for optimal full body health. The retreat center is a gorgeous biohacker's paradise located right on the ocean. You can think of this place as a nervous system reset facility. At the Art of Alpha, we are seeking men who wish to cultivate freedom, wisdom, sovereignty, physical fitness, truth, and love in themselves and in those who look up to them. If you've always felt motivated to push yourself to new limits, to discover the best version of yourself, but you've struggled to find the right community to immerse yourself in, then the Art of Alpha is for you. You will be training alongside a group of men who have been individually selected for their outstanding self-discipline, virtue, and work ethic. To apply to join the first ever Art of Alpha event, go to breedloveevents.com. And yes, I did say you'll have to apply as we're striving to gather a select group of men for this experience. Again, that's breedloveevents.com to apply to join us for the Art of Alpha on the Pacific coast of Mexico, September 5th through 9th, 2024. Have you ever wanted to live in an off-grid community with complete food, energy, and water independence? If so, then you need to check out the farm at Okefenokee. The farm is a pioneering community designed to foster longevity and well-being, eliminating elements that detract from these goals. At the farm, the convergence of nature, nutritious food, a supportive community, and the ethos of slowing down is unparalleled. Positioned at the gateway to the UNESCO World Heritage nominated Okefenokee National Wildlife Refuge, the farm at Okefenokee stands as a testament to a lifestyle that truly nurtures health and happiness. Unlike conventional housing developments where a token communal garden may suffice, the farm itself is the community. Small, intimate micro-villages seamlessly integrate into the fabric of a sprawling agricultural community. So if you're interested in joining this off-grid community, then go to okefarm.com today to learn more about becoming a member. Make sure to tell them that I sent you for a $21,000 discount on their custom cabin pricing. Again, go to okefarm.com to learn more about joining this revolutionary regenerative agriculture community. So you and I first met, this is what, 2 years ago, maybe? We were having dinner at Michael's house, at Sailor's house. Were you with Marathon at that time?
Yeah.
Okay. So you were with Marathon. This was before then, I guess, your first big treasury buy.
It was
January 20.
Bitcoin Miami 2020.
So maybe after then.
So it was after the buy.
But before the most recent one, obviously. What, and I know, and you and I spoke about 6 months ago, I think, when I had just moved to Miami. And I think you were going to have dinner with Sailor again, and you had said something to the effect, he's going to try to convince me to buy more Bitcoin. What has that...
He's a convincing guy.
He is a very convincing, very compelling guy. What has that... I mean, how much has that played into your, I guess, views on Bitcoin? Do you see a lot of other companies kind of adopting this MicroStrategy playbook? I mean, obviously you're not doing exactly what MicroStrategy is doing, but maybe taking some pages out of the playbook. Do you see many other companies following suit?
I think people are beginning to open their eyes. The people who run public companies are constantly worried about optics, right? I mean, they have their board they report to, they have their shareholders that they're fiduciaries for. And so it's not like you run your own business. If it's, if you make a decision to hold Bitcoin using your treasury for your business, that's your decision, right? And maybe you have some business partners, and so you guys get together and you decide. It's very different as a public company because you have regulatory issues. And up until not long ago, the FASB rules, the rules about accounting, were that you could only impair Bitcoin when you had it on your balance sheet. You could never mark it to market, which meant that you couldn't report a fair estimation of the value of your Bitcoin in your financials, which meant you couldn't borrow again. There are all sorts of limitations that it causes. Now you can. And so that was a major step.
When you say mark to market, you mean actually market to fair market value?
Exactly. Every quarter when we release our financials, we show essentially a gain on our balance sheet.
Unrealized gain.
Unrealized gain with Bitcoin or unrealized loss. And we adopted it for the 2023 fiscal year, which ended in December of last year. And when we've reported our earnings after our first quarter, we had a huge gain because we had been marking down the value of our Bitcoin for so many years that all of a sudden there was a big gain. So, non-cash gain. But so now companies all of a sudden are seeing that from an accounting perspective, you can hold it. Obviously, from a regulatory perspective, Bitcoin's deemed a commodity, so doesn't suffer from the issues. And one of the last real barriers outside of just optics was how do you buy and hold it? Right? Corporate treasurers don't want to have to worry about self-custody. And even us as a Bitcoin company, we use third-party custodians. Part of it is we want to be able to sleep at night. We don't want to have to worry about somebody sequestering one of our employees. Right? And we want to have the ability to make sure it's in multiple places so we can use it however we need to use it, if we need to use it. And as a regulated company, if the U.S. government's going to get ornery with me, there's all sorts of stuff they can do. So the holding the Bitcoin, we're not exactly going to get on an airplane and leave the country with our Bitcoin anytime soon. So we prefer to keep it someplace where it's insured and it's taken care of and we don't have to worry about it. So now that you can go and buy ETFs, for example, as a company, it's become a lot easier. You don't have to worry about security. You don't have to worry about all sorts of things. And as you get a little bit more sophisticated, you can then think about, okay, maybe I should even dip my toes into buying mining companies or MicroStrategy or other companies so I get a little bit more beta. And it's very interesting. One of our investors is the state of Wisconsin's investment board. This is a pension fund. City of Houston's Fireman's Pension Fund is also another one. And they are now, organizations like this are now seeing, hey, Bitcoin has this track record of over time continually growing in value. And why shouldn't we hold it? And now there are ways they can hold it easily. And you're starting to see with the ETFs a little bit of institutional investing. But the floodgates haven't opened yet because most of the large wirehouses, the Merrill Lynch's, et cetera, they still haven't passed compliance on these ETFs. But the minute they do, and my understanding is many of them are in the process and it's going to be 6 to 9 months, but even if it's a year out, you've got $40+ trillion of pension money sitting out there. And I've always kind of thought, hey, a 1% allocation would be insane. But when I talk to some of the advisors at these big banks who are advising these pension funds, and I said, what are the pension funds saying their allocation would be? And I'm being told it's 2 to 3 to 4%.
Wow.
That's a huge number.
Yeah.
And so it gets me back to this thing, okay, it makes sense to own a lot of Bitcoin.
Yes.
Because other people are going to want to own a lot of Bitcoin.
Yes.
Right?
Yeah. Wow. It's amazing how quickly, because you've been around Bitcoin for 7 years.
Yeah.
Is this one? Yeah. It's amazing how quickly it's changed, right? That we now have presidential candidates talking about it. I don't know if it's the election issue, but it's damn near the top of the list at this point.
Yeah.
And now you've got this wave of institutional adoption on the back of the ETFs. Do you think the ETFs present certain risk, though, and that, well, I think many of them are using Coinbase custody, right?
Yeah.
So there's a concentration risk there. Do you see other risk or?
Yeah, I think the biggest risk is a market liquidity risk.
Yeah.
Right? So you can kind of think of it this way. You have the open market, right? The Coinbases of the world. Then you have the OTC market. The ETFs essentially operate on a T+1 basis. So if you go buy shares in an ETF on Monday, they go into the market and buy Bitcoin after market close or the next day, and it settles the next trading day. And so if you buy shares on Friday, then they're doing buys on Monday.
Yeah.
Which means what happens to Bitcoin over the weekend can influence the price of the Bitcoin that they buy on Monday. And there's a lot of trading around that. As the volume of Bitcoin in ETFs grows, and you think about how many retail investors operate, bad news, stock exchange drops, the NASDAQ, S&P 500, whatever, drop 10%. Well, if they decide to sell 10% of their holdings in Bitcoin all at the same time, the market is still fairly thinly traded in the open market. And so you will likely see a bigger drop when there's a drop. And the OTC desks may not have the capacity to absorb that volume. And so people have to be very careful how they look at the markets, because when you get too much Bitcoin sitting in a concentrated set of hands, when those hands make a decision and move, things can happen that are disproportionately more violent than otherwise. Now, what's interesting is what's going to happen, I would say, in the next 6 to 12 months is we'll see a whole series of derivative financial instruments, which will allow people to trade essentially risk and hedge risk in the ways people can do around other commodities.
Right.
In the oil industry, there's all sorts of ways you can do things to hedge your risk. And so we're going to start seeing more and more of that around Bitcoin as a way to create a much more liquid market. Because imagine a future where the US government owns 2 million Bitcoin. That's 10% of the available Bitcoin. Saudis, Russians, Chinese, India, et cetera, decide to own 20% in aggregate. Okay, now that's 30% of all the Bitcoin in the world has suddenly just is off the market. So that leaves 70%. You could argue that roughly 4 million Bitcoin, the keys are lost. I mean, Satoshi's wallet, stuff like that, right? Okay, so that's another 20-ish%. So now you're at 50% of the Bitcoin is kind of locked up. And then throw the ETFs in there, already at 1 or 2%, Microstrategy, 1% and growing. Okay, so now you're kind of at 60%. Not a lot of liquidity in the market. And so you either have to get in now, or it's going to get a lot harder. And the market's going to have this roaring demand for these derivative instruments. And so you're going to see the actual liquidity speculating on Bitcoin as an investment asset grow exponentially over the next few years.
Yeah, it's fat, and Again, something we've been talking about in Bitcoin for a long time, and it's been fascinating to see it start to materialize. But I agree that I think it's only going to get more amplified, right? It's almost as if there's a growing audience inside of a theater, but a shrinking exit. And the realization among the audience members that they need to exit, right, out of fiat instrument A into Bitcoin. That message is spreading quickly, but the door is shrinking.
Yep.
And so the rush for the exits is going to be spectacular.
But there's a very unique aspect to Bitcoin, which I don't think a lot of people, realize. And that is that with other commodities, they can be consumed, right? Gold is consumed for industrial purposes, jewelry, et cetera. Oil is consumed, metals, et cetera. And with financial instruments like stocks, they're driven based on the performance of the companies that the shares represent. And this argument that people have had for years that, well, Bitcoin isn't backed by anything. Bitcoin doesn't represent anything. Here's the beauty of that. And that is that Bitcoin trades purely based on the sentiment people have in its value and its scarcity. Period. That's it. And so it's a much more pure form of investment. And when you see Bitcoin move, it has 2 times the volatility of an S&P or a NASDAQ, but look at how fast it bounces back, right? If Tesla produces bad numbers, the stock drops, you have to wait till the next earnings before the stock likely starts rolling back up again. Mt. Gox, or the state, the German state that sold all this Bitcoin a couple of weeks ago, price dropped, came right back up. Right? You look at the dips we've had and the amount of volume of Bitcoin that's gone into the market that's been absorbed quickly, and the prices come right back up.
Yeah.
That speaks to the amount of demand there is for Bitcoin, and that speaks to the health of the Bitcoin liquidity market today. Right? And I think that the concept we've had of these cycles that we've had before, 4-year cycles, and the miners are going to capitulate. The miners' impact on the price of Bitcoin today is insignificant, other than miners holding a lot of Bitcoin and selling. But the amount of Bitcoin miners produce daily that is sold into the market is becoming a more and more insignificant piece of the equation. And so that leaves just pure supply and demand.
Right. That's a great point. So it's purely sentiment driven. And on the other side of that, so you could also say it's like the credibility of Bitcoin's monetary properties, basically, or what it's trading based on.
Exactly.
And the credibility increases day after day, and the integrity of the network, because it's doing exactly what it says it will do, basically, right? It's open source software. You get the Lindy effect working for you, where it's like been around longer, so people start to think of it more as a permanent feature of our lives. And it just keeps performing well. So the sentimentality around Bitcoin just goes up. And that is basically what drives the price.
Right. And the best thing about Bitcoin, and I'm the first person to say, you invest in Marathon stock, you're investing in the management team and my capability to run the company. Nobody runs Bitcoin.
Right. Yeah.
This is the purity, the beauty of Bitcoin as an investment asset. And this is why governments should feel comfortable investing in Bitcoin, because nobody controls it.
Yes.
Right?
Yeah.
It's down to pure supply and demand or market sentiment. Right?
Yeah, like gold again, right? This pure neutral reserve asset. Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. You've mentioned nation states
Yep.
holding Bitcoin. We're at Bitcoin 2024 here in Nashville. The headliner for this event, unbelievably so, is Donald Trump tomorrow, speaking at 2 p.m. And he has recently kind of made a pivot on his views on Bitcoin. He now seems to be much more of a proponent. Do you see the possibility of the United States moving into a stage where we actually have a national Bitcoin reserve? And if so, do you think other countries would emulate that strategy?
Absolutely. The U.S. is the single largest holder of gold in the world. The dollar's not backed by gold, but gold allows the U.S. to project power into financial markets. Other countries hold gold as their reserve. And actually, it was the holding of gold that drove Nixon to decouple the dollar from gold, because other countries were withdrawing their gold from the U.S. system because they saw the spending that was going on at that period of time, and they thought the U.S. would go bankrupt. So the U.S. government holds a lot of gold. They're the largest landowner in this country. They own about 28% of the land in the country. And what recently happened was the expiration of the petrodollar, which was this agreement where the commodity producers would price their commodity in dollars in protection for, in exchange for protection from the U.S., and then they would invest that in treasuries. Right? That's now gone. And so we've seen the U.S. as a reserve currency drop in significance, and it's now down sub 50% as a holding asset. The Chinese now buy gold instead of treasuries. Japan, which was one of the biggest buyers of U.S. treasuries as they were going through their recent financial situation, have now also tapered. Comically, one of the largest buyers of treasury bills, which are short-term, is Tether. Right? They're the sixth largest buyer. They buy at a nation-state level.
How ironic.
Right? And so the U.S. needs to fund its debt somehow. And if people aren't buying dollars or putting things in dollars, that is a precarious situation. So that leaves the U.S. with only a couple of alternatives. They either have to let the dollar drop in value significantly and have high inflation so they can inflate away the debt, but that would be disastrous. The other thing they can do is they can invest in an asset like Bitcoin, which will over time appreciate in value. And if it can appreciate at a rate faster than the U.S. total debt appreciates, then now you have something you can use to offset the debt over time. And if the U.S. were to hold 2 million Bitcoin, and that Bitcoin goes to $20 million over 10, 20, 30 years, then now all of a sudden the U.S. would be holding at $20 million, roughly 40 trillion plus. Well, the federal debt today is 35 trillion and growing. And there's no way the government can service that debt at current inflation levels, interest rate levels.
Yeah.
Right? And so the minute the U.S. does it, they will now have the ability to project power in the Bitcoin market because they will have pricing power because of their supply, just like they do with the Strategic Petroleum Reserve. Why does the administration sell oil out of the Strategic Petroleum Reserve? To drop the price of gasoline, to lower inflation. Right? Why does the Strategic Petroleum Reserve exist? Well, it was to protect us from price shocks in the outside market. Well, today the U.S. is arguably the largest oil producer in the world. And so they have the ability to not suffer the consequences of high international oil prices in the same way. But if the U.S. does it, then everybody else is going to have to do it, because you can't be a country and not have a strategic reserve of Bitcoin if all the other countries have it.
Right.
And countries like Russia, China, and others look at Bitcoin as a neutral currency that isn't controlled by a government or a country, that allows them to trade independent of any sanctions the U.S. would ever do. And so if the U.S. wants to keep them from trading in violation of sanctions, they have to also have enough Bitcoin so they can impact that market. And so it becomes an issue of national security, which has nothing to do with cybersecurity or anything like that. And when President Trump talks about we should have all Bitcoin mining in the U.S. Part of that is a thinking that if you have Bitcoin mining in the U.S., then you have the ability to determine what transactions get processed, which is why every single sovereign who wants to hold Bitcoin is going to want to have mining in their country, and which is why they're all going to want to operate their own mining pools so that you can't essentially through sanctions, OFAC, et cetera, control their ability to transact in Bitcoin. So the implications of Bitcoin becoming a sovereign reserve asset are that every country in the world who wants to hold Bitcoin should have Bitcoin mining in it, which will lead to a huge decentralization of Bitcoin mining, right? And that will force Bitcoin miners to have to become super efficient at what they do. And so we believe that over time, more and more Bitcoin mining will be done from a perspective of free energy, as we call it. And so we started a business unit within our company that does energy harvesting. So energy harvesting takes wasted energy, underutilized energy, converts it into Bitcoin, and then takes the heat from that conversion process and feeds it back into an industrial process. So you may have seen recently we announced we're heating 11,000 homes in Finland using Bitcoin. It takes 2 megawatts of power, and we could heat 11,000 homes. So we get paid for heat. That offsets our cost of electricity.
Right, and that is waste heat from the process. It's nothing additional you're creating.
So think of it this way. A company or a building pays money for electricity to generate heat to heat the building. Or they can pay us to generate heat to heat the building. And we generate heat by mining Bitcoin.
Right.
A community can deploy solar panels and battery systems in excess of their energy need. And instead of selling the excess energy to the grid at some low price, they can mine Bitcoin with the excess energy because there's zero marginal cost to that energy. It's coming from the sun. Right? And so we're working now with companies who are taking Bitcoin mining systems and converting them so that they can be used to take that solar energy, mine Bitcoin, and then generate hot water for the homes that way. And all the while, those companies are allowing consumers to pay 25% less for their electricity. So here you're starting to see Bitcoin mining move from this big industrial kind of thing that has been our traditional business, moving to a highly decentralized, highly distributed form of mining where the cost of electricity and halvings don't really have an impact because Bitcoin mining is just a tool to get hot water, right? And in the industrial complex, look at beer brewing, look at methanol, ethanol production, look at paper mills. They all need hot water. They all need heat. And companies pay roughly, if you think about their energy costs, their energy budgets, about 14 to 15% of their energy budgets are for heating things. Right? So if you can take the cost that you would invest in generating heat through heaters, which I think it's a waste, right? And instead mine Bitcoin and generate the heat.
Right.
Then now you're doing two things. One is you're lowering the cost to mine Bitcoin, making it hugely energy efficient because you're taking energy that otherwise was going to be used anyway, right? So you're not parasitic now. You're not an augmented load on the grid. You're just part of an existing load that was doing something else before. But if you can also generate your own energy by taking the waste product from beer brewing, taking the waste product from paper mills, waste heat, waste electricity, flare gas from oil fields, methane from landfills, agricultural methane from large dairies and farms. And you can build systems that can be deployed next to these factories on the farms and the homes, et cetera. You're mining Bitcoin at zero cost.
Wow.
Right? And I think that's the future. And we're super excited about, Jack Dorsey's team at Block talks about, putting Bitcoin chips into everything. And I totally agree with that concept. I think that's the future. We look at it as more of there's this commercial interim step, which is think of any process that has a battery, some form of energy consumption to it.
Which is every process.
Right? And mine Bitcoin.
Yeah.
With the excess energy.
Right.
You don't need to be mining Bitcoin 24/7. Because as large miners, with subsequent halvings, the cost of electricity on the grid's not going to go down. And so eventually it will not be viable to mine Bitcoin just because you want to mine Bitcoin.
Right.
Unless you're getting paid for something where Bitcoin is the tool for what you're doing. Right. And in the AI business now, there's some really interesting things for Bitcoin miners where you have two types of kind of power load in the AI world. You have LLMs, the learning system. Mm-hmm. That's a constant power draw. And power utilities like constant power draws. Mm-hmm. But inference is like search queries, right? Mm-hmm. And so you all of a sudden have peaks and you have valleys. Well, that means your power draw is going to do that. And so you need to have a complementary power draw that can perfectly balance your load so that you're flat. Bitcoin mining is perfect because it's like a battery or a capacitor. It sheds load or adds load whenever you need it.
Right.
So there's this really good model where you can marry Bitcoin mining and AI. That doesn't mean Bitcoin miners have to go into the AI business.
Sure.
Simply means you co-locate at the same data center.
Yeah.
The other thing is Bitcoin miners can set up and start running in very short periods of time. So when AI and hyperscalers want to build sites which take years to build, they can partner with a Bitcoin miner, tie up the power agreement. The Bitcoin miner can consume the power, and then as the AI center comes online, the Bitcoin mining load can decrease and then act as a load balancer.
Oh, like bootstrapping it, basically.
Exactly.
Yeah.
And so we're investing a lot of effort in our technology business around building the technologies that allow all of that to happen.
Yeah.
Because we think that's important.
This is so fascinating, and probably, I think, one of the most underappreciated or underdiscussed points of Bitcoin, that it functions as this global bounty program for energy harvesting or seeking out underused or unused energy resources, as you've described. And when you also further consider that energy is the number one input to every industrial process, right? If we're driving down the cost of energy, we're equally saying we're driving up wealth creation. I mean, it's like a win-win from both sides, right? You get a way to store purchasing power in a way that can't be confiscated, but you're also increasing productivity, which is increasing the purchasing power of money. So Bitcoin, very powerful in both respects. And so what stands between us and that future is something like more regulatory acceptance or clarity or assimilation. Like, what do you think the blockages are between here and there?
It's simply getting the companies you're going to partner with to go, oh, I didn't think of that. It's not against the law. All of this stuff I've been talking about is just people building systems. And, home heaters based on Bitcoin miners, there are companies doing that today.
Yeah.
Right?
Yeah.
It's just like in any new industry, we're going to slap together an old miner and do some things. Yeah. Well, we're very focused on building specialized systems for this. We have immersion or cooling technology that's designed for large-scale or micro-sized data centers, so you can capture all that heat and use it super efficiently. Our next generation immersion cooling system is 3 times as efficient as heat pumps in capturing and generating heat. So think about that. Everybody's gaga about putting heat pumps to heat homes and cool homes and do all that stuff. We have a solution that's 3 times more efficient.
In terms of energy usage per unit of heat pumped in or out of the home?
Or it's the energy efficiency of it, right?
Okay.
Right. We are able to capture 3 times the energy, essentially.
Got
it. Excuse me.
Yeah. And this is fascinating stuff. And that when you say heat pump, we mean heating or air conditioning, right?
Yeah. So a heat pump is a technology where you're essentially taking an amount of heat energy, and you're either compressing it or expanding it, and depending on which you do, you're creating
heating or cooling.
Right, you're augmenting the heat or you're cooling it, because you're forcing. If you force molecules to get closer, then they have to essentially shed energy, right? And the opposite when they're expanding. So when you have 2-phase immersion, which is what we use, you have a liquid that then boils. And that there's a point at which liquid converts into vapor, and when it does that, it takes energy away from the liquid, and it's about it. There's a need for about 6 times the amount of energy as it escapes into vapor, and then when you cool that liquid, it sheds that in heat to another source, which is a heat exchanger. Right? And so it's very simple technology. It's been complicated in the past because of the fluids you have to use and things like that, but all that is getting better and better. And the cost to do it now is getting less and less.
And so there's just a matter of people coming to the realization that there's all this efficiency to be added to almost every industrial process by complementing it with Bitcoin.
Yeah.
That's what stands between us today and this vision of tomorrow.
I mean, it's no different than robotics, right? Or automation. Or electric vehicles. Now, I was told a story a few years ago that there was apparently some meeting at some point in time where the heads of the automobile industry were sitting in a room saying, for decades we've been competing on miles per gallon, 0 to 60 acceleration, the quality of the leather in our seats. And then we needed to start putting software in our cars because consumers wanted this technology. Little did we know that a software company would build a car.
Right.
And I think that's a little bit the perception. People are set in their ways, right?
Okay.
And they have a certain way of thinking. And evolution is always easier than revolution.
Yes.
But every now and again, a revolution happens, right? The internet was a revolution.
Yeah.
Right? And things like that take time. They have to build momentum. What happens, though, is as soon as you cross a certain tipping point, the adoption just amplifies and runs. And that's the same case with Bitcoin as an investment asset, and it's the exact same case with Bitcoin as a tool for doing other things. And Bitcoin is a tool for energy conservation. It's a tool for carbon mitigation. It is a tool for energy distribution. It has all sorts of ways you can use it. And people just have to realize that, wake up to the ability. And then as people build more and more technologies around Bitcoin that let it do things, same thing applies at L2, layer 2 of Bitcoin, and all the application people are building.
Yeah, it's an excellent point. I think Saylor said something to the effect once that there's only a certain speed at which a profound idea can propagate across the minds of men. And maybe that's exactly what we're describing here is this thing just takes time for people to wake up to it.
People operate at different levels with certainty and uncertainty. And the idea of the propagation of an idea has to do that you flip from uncertainty to certainty. We all suffer from a confirmation bias. And so we all initially look for things that confirm our bias, and then eventually it flips. Attraction between humans suffers from confirmation bias. You meet somebody, something clicks, and you say, gosh, I like this person. And you're looking for signs to reinforce your belief. And then something happens that causes you, now I've got the willies. And now you're looking for things that confirm the opposite. So if you have a belief structure, a belief structure is like a table, right? Think of the table. It's based on your model of the world, and it's based on evidence that has taught you that it's a certain way. And if you can show people that there's a different belief structure, and you can provide not just enough evidence, but you can show that maybe their thinking was a little flawed as to why they thought something was bad when in reality it's good, or something was strange and it's not. Think about that. A lot of people will say, oh, I don't like avocado. Then one day they eat guacamole and say, wow, why didn't somebody tell me about guacamole, right? Avocado is awesome. Psychology is interesting. Right? And people are just afraid of the unknown. And it's getting people to feel comfortable with uncertainty, because the world over the next 10, 20 years, there's a ton of uncertainty out there. Right? And, I know you have kids, I have kids, mine are more grown up, but I'm hoping to be a granddad soon. And I want the world to be a great place for them, right? I think Bitcoin plays a major role in that. But I also want to be able to create more certainty for them.
Yeah.
So what can I do to create certainty in the environment, in the financial system, and financial viability? My generation, I'm the last of the boomers. And my generation had a golden opportunity to build capital and wealth. Right? We had near zero interest rates. We had, globalization. We had all these tailwinds. Current generation today that's going to the job force, totally different story, right? Can they afford a home? Not easily, right? You look at those things, and there's no, you can't help but wonder, okay, why are millennials, not investing in homes, but instead spending money on trips? Well, there's things like inflation. There's things like they may not be able to do it in the future. And they don't view home ownership as a vehicle or an asset. But if you go talk to people under the age of 40 about what would they do with their money if they were saving it, more and more people are saying they want to put their money in Bitcoin.
Yeah.
Over the age of 50, different story. They're still learning. But for that younger generation, they find certainty in Bitcoin. They find certainty in picking certain stocks that they can believe in. They're not buying the indexes. So there's a paradigm shift happening. And I think we're going to see a paradigm shift in how the world views the tools that Bitcoin provides as that under 40 generation takes over control of the world.
That's excellently said, and I think a great place to drop it. Fred, thank you so much for doing this. I love the belief structure as an actual structure. That's a good metaphor, right? To find the one that you can set the most things on.
Absolutely.
Thanks so much for doing this.
Thank you.
Yeah. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.